Welcome back to Snow's investment journey. Thanks for joining me. In episode 1 we covered off my first day of investing with Trading 212, moved £3,000 into the account and made some, frankly, random purchases across lots of different areas with no idea what I was doing.
What an idiot!
I'll just take a moment to remind you that nothing in this video should be considered as financial advice or recommendation in any form. Any investments made are at risk of both increasing and decreasing in value. So episode 2's rolled around quite fast. So much happened in day 1 that it needed its own episode, and so many mistakes were made in day 2 that this will be its own episode as well. This time we start looking at stocks with dividends coming up, learn about the dividend dates and make lots of stupid investments. I guess that means that if you've returned here for a good laugh, you're in luck, but if you're here to learn how not to start investing, you're also in luck. So day 2, Tuesday the 14th of January 2025. As I alluded to last time, addiction of checking the Trading 212 app and my portfolio value is already set in. The first thing I did that morning was check how my portfolio is looking. I closed yesterday with a value of £2,999.19. After the stamp duty and currency exchange fees I paid yesterday, it looks like a win overall, but a very small win. And then I realise I'm already earning around £2.75 a day in interest in the cash ISA. So is that very small profit I had yesterday actually a profit, or would I have more money right now if I'd left it all in the ISA? I'm quite a fan of spreadsheets.
I'm a nerd.
So I made a quick table on a spreadsheet to calculate this. It takes into account the interest rate I'm currently earning and how much capital I've invested instead of leaving it to sit and earn in the cash ISA. The table allows me to both change the interest rate on set dates and change how much capital is invested, and it will continue to show me a very accurate possible interest figure. It won't be 100% accurate, but it's very, very close, to the penny. I can use this to see if I'd have been better off not starting the journey and sticking with the interest instead. So the £3,000 I'd invested on day 1 would have earned me 39p in interest if I'd left it in the cash ISA. So at this point, I can say that my possible investment would have been valued at £3,000 and 39p. And I'm currently sitting at £2,999.19. So I'm £1.10 down. I'm okay with that, but I am thinking that I need more money in there for the gains to be effective. I see it as my investments are so small at the moment that as the price increases and decreases, it doesn't actually register as a full penny increase or decrease for me. That's the reason why I'm thinking that there needs to be more money invested.
That's the stupidest idea I've ever heard, you imbecile.
I'm also conscious that I'm here for the dividends, so the £250 currently sat as cash, it's probably not going to be enough. Overnight, between day 1 and day 2, I found a website that lists upcoming dividend-paying stocks. It showed both US and UK markets, and lots of different dates: announcement, EX-div, record, payment, etc. I had to Google what each of them was, but essentially I realised that the EX-div was the only one I was actually interested in. I thought, why not just buy the stock the day before EX-div, sell the next day? As long as the price doesn't drop by more than the value of the dividend, I'm quids in. So if a stock has a dividend of 10p, as long as the price of the stock doesn't drop by more than 10p, I'm in profit. So that's what I did. On the morning of day 2, I transferred another £2,000 to the Stocks and Shares ISA and invested in the following stocks. 86 shares of RWS Holdings, offering a 10p dividend each, total £8.60 dividend. 0.89 shares of Fairfax Financial Holdings, offering a $15 dividend, total $13.35. 20 shares of Armour Residential REITs, offering a 19.3p dividend each, total £3.86 dividend. 416 shares of Premier Mitten, offering a 3p dividend each, total £12.50. And 22.48 shares of Buckle, offering a $2.85 dividend each. This was actually a special dividend of $2.50 and a regular dividend of 35 cents, so total $64.07 dividend. Did I properly look into the stocks and assess what the risk was? No. I saw the £77.25 and thought, money, 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 what could go wrong? The stocks won't swing nearly £100 between them over 24 hours, so I just sell them tomorrow and reap the dividend payment. I didn't look into them, I don't even know what these companies do, I just checked the volatility over the last couple of weeks and dived straight in.
No better word than stupid.
I also decided that having some stocks for the long term would be a good idea. I decided to just look around, see who was having a good week, month, quarter or year, and buy them based on a single thought in my head saying, yeah, that'll continue to rise. Most of them were airlines. It's winter. Lots of people are booking their summer holidays at the moment. I certainly have. More bookings means the companies are doing well, so the stock should increase, right? Sure. I pumped £250 into Jet2, £250 into IAG, £100 into TUI, and £100 into Wizz Air. I came across a company called SAP, which I know is software that my mum uses. They were having a fantastic 12 months, so I dropped £250 in. You heard that right. Literally, my mum uses it, combined with a positive 12 months was enough for me to risk 250 quid. How stupid could I be? I also put some money into Tesco and NatWest, as they both had good returns over the past 12 months. At this point, my investment page on Trading 212 was starting to get a little long, but it was also starting to go a little red. There was a little niggling voice at the back of my head asking if all this was a good idea. Maybe I should just sell up, get out, take the dividend win from today and hope that overall I break even. But maybe staying another couple of days will make more go green again. And, the stock market's there for the gains. So what should I do? Well, I doubled down. I moved another £6,000 over from the cash to the stocks and shares ISA and dumped the majority of it into the BlackRock pie, the Vanguard FTSE All World and the Vanguard S&P 500 DIST funds that I'd opened on day one. It seemed like a better way to mitigate the reds, as the funds were doing quite well and there's no FX fee or stamp duty to pay on the funds. So that was my early strategy. When it starts to go red, just throw more money at the stocks that are green. I also didn't like how unbalanced my dividend pies were. The daily dividend US pie had way more than the UK pie in it, so I threw another £500 at the UK pie, with a long-term goal of balancing them both. I think this kind of mindset, the just throw more money in mindset, was driven by just how easy it is to move the money in. And more nowadays, cash or money, it's just a figure on a screen. As the world moves away from physical cash, we go more contactless and delve into ideas like crypto. Combine that with inflation and interest rate volatility we've had over the last year or so, it's harder and harder to appreciate cash's value. Anyway, as the day went on, certain stocks had a good day and others had bad days. The stocks that were up, like Wizz, I sold off quickly. I think this was because of the sea of red. I was starting to get nervous about how deep into this I already was. TUI also appeared to pop into the green, so I sold. However, in hindsight, I think I lost money overall with the currency exchange fee at both buy and sell, and the market sale not netting what I expected. I think I was only in the red by about 5p, but still, an idea in my head was that I should only realise profits, not losses. So I decided I'd use the limit buy or sell feature from now on. I also looked over the funds I'd invested in and saw that the Vanguard All World High Yield Fund only had a return of around 12% over the last 12 months, whereas the US dividend pie had over 20%, and I think Trading 212 will only show 20% as a maximum, even though it could be higher. And the S&P 500 was around 30% at the time. So why am I wasting my money with the All World High Yield? I pulled all my money out of VHYL and put it back into the US dividend pie. That's all the trades for day 2, so how did we close? Well, another £7,681 has moved into the account over the course of the day. That left exactly £10,000 in my cash ISA. So it's now sitting at £10,640.65. By my maths, with the total deposits, I'm down 0.36% for the day. Not great. Some of that is just currency exchange fees and stamp duty, but as I mentioned, there was a sea of red, showing most stocks dropped over the day as well. So how does that figure compare versus ISA interest? Well, if I hadn't started the journey, I'd have earned £1.79 over the 2 days, so my ISA would have been worth £10,683.29. So I'm down £43 versus that, and I guess I'm down near enough £41 overall today. So, a tough first 2 days for someone that's essentially new to this, but I'm staying strong. I know it's all about the long game. Thank you for sticking around to the end of this video. Again, I hope it was a good laugh for all those of you that know a little something about investing and can see the mistakes I'm making. And for those of you that, like me, are learning here, I hope you found something useful and won't make the same mistakes. Episode 4 will likely be all the mistakes that I know I made on my first week investing kind of episode. So please hit that subscribe button to make sure you catch episode 3 and 4. Please remember to leave a like, it really does help me out a lot. See you next time.